Mark, Jumana in London talked about kind of like the cross currents and trying to navigate the conflicting data and reports there. You just heard Contessa Brewer's report about Snap and some of the disappointment there, and it's carried through into other tech and social media stocks. And then we've got a week-long move in the NASDAQ, 5 to 6% higher. So what do you make of it?
Well, what I make of it is we are not out of this bear market, and bad news is going to punish investors, and even in companies that aren't directly related. We're seeing that with Meta and Google being taken down with the Snap news. All we need now is some negative global macro news, and you'll see more contagion. The market is way too tentative because there are legitimate risks out there. And whether we saw great reporting this week on the energy crisis, the potential energy crisis over in Europe when Brian was reporting there, that's a huge risk over in Europe. That could take down or affect the markets. We have potential COVID resurgence here. We see our president getting sick with COVID, and we still haven't tamed the inflation risk. So there are reasons for investors to be skittish. If we look beyond those, I think we see where investors are going to be hungry, and they're bidding up growth stocks. And I think that's going to be the playbook out in Q4 when we have things calm down a bit. I think we resume to growth, overcoming, and leading the way in this market.
You know, Mark, it's interesting because you would think, I understand the point you're trying to make, but many of the traders and investors I talk to have talked about the disappointment, obviously, with the values that we've seen and the declines in the market. But the case has been made by many that this has been a very orderly decline. There hasn't been a lot of panic. There hasn't certainly been this capitulation that some people are calling for. And I'm looking down at my screen, the CBOE volatility index on the S&P 500, which measures kind of that fear in the market, is right around 23, which is like the long-term average for the markets overall. So how skittish is this market?
That's a great data point, and I'm glad you raised it, because in this bear market that we're in, check the tape. Every time the VIX approaches 21, 22, 23, there's a sell-off. It's been an inverse indicator. And when the VIX climbs back up into the high 20s, that's where investors have jumped in for these bear market rallies. These are bear market rallies. The enthusiasm we've had the past 5 or 6 weeks, it's been great for investors. There's no doubt about it. But a lot of us don't think it's long-lived. We think there's another hiccup down. That's what the tape has shown. And until we know that we're no longer in a bear market, until we have more visibility on inflation, more clarity from the Fed, I think what we had last week and the week before was a bear market rally. And I think that's what I'm talking about when I say investors will be a bit skittish through the summer. It's the lack of visibility.
All right. Sounds like caution is the word of the day here for Mark Avallone at Potomac Wealth. Thank you very much, sir. Have a nice weekend.